Welcome back, investors, to Ticker Time News. I'm Adam, and after a rough Q4, Apple, ticker symbol AAPL, bounced back with a very nice upside result in Q1. As important as the report's EPS and revenue numbers were, I think Apple's commentary on supply chain constraints was even better music to investors' ears. The headline numbers featured solid beats on EPS and revenue, a pretty big improvement from Q4's inline EPS result. iPhone, Mac, and wearable sales all exceeded analyst expectations. iPads, however, they fell short. Demand remains robust, but that product faced the most severe component shortages. Services revenue was basically in line, maybe a little tiny miss. iPhone sales were boosted by the launch of the iPhone 13. Revenue climbed 9% year over year to an all-time record high of $71.6 billion, despite the supply chain constraints. Mac revenue was the biggest growth category, up 25% year over year to $10.9 billion, also an all-time record, despite, yep, you guessed it, supply chain constraints. Apple is seeing strong demand for its newly redesigned MacBook Pro. It's worth noting, though, that Apple is now 1 year into its transition to Apple Silicon, and already the vast majority of Mac sales are from the M1 powered devices. iPad was the main trouble area. Its sales actually fell 14% year over year to $7.25 billion due to significant supply chain constraints. The good news is that the Apple iPad is by far Apple's smallest category, at about 6% of total sales, compared to the iPhone, meanwhile, which accounts for about 60% of total sales. The supply chain constraints, however, have been long forecasted by Apple, so their impact doesn't come as a big surprise. Apple warned that component shortages on its earnings call back in late July, expecting these supply chain constraints to primarily impact the iPhone and iPad, which it kind of did. Then, during its Q4 call in October, Apple said that constraints would cause a large hit to Q1 revenues, more than the $6 billion experienced in Q4. During the Q&A, Apple conceded that that did not happen. The good news is that Apple now expects fewer supply constraints in Q2 than it did in Q1, which is about the March timeframe. Bottom line, this Q1 report was a welcome after the rough Q4. Demand remains robust across the board, and iPhone 13 sales were very strong. Remember back in the holiday season when reports were surfacing around that iPhone sales weren't doing so good? Well, that was fake news. A takeaway here is that even a tech behemoth like Apple is not immune from the global component shortage. The timing of the shortage was unfortunate as it hit just as Apple introduced its iPhone 13 lineup, as well as the new Apple Watch Series 7, new iPad, and new iPad mini, all of which represent significant advances. However, investors should take comfort in the prospect that supply constraint issues should ease in Q2, at least for Apple. I had a little concern heading into this report after Intel, ticker symbol INTC, pushed back its timeline for supply constraint improvement earlier this week. Intel now expects ecosystem constraints to persist through 2022 and into 2023 versus prior guidance for gradual improvement heading into 2022. So they're pushing it out a whole year. So I take Apple's outlook as a win. It's also good news for Apple suppliers like Skyworks Solutions, ticker symbol SWKS, Corvo, ticker symbol QRVO, Cirrus Logic, CRUS, Broadcom, AVGO, Taiwan Semiconductor, TSM, and Qualcomm, QCOM. And then you have the Van Erik Semiconductor ETF, ticker symbol SMH, all of which ended today in the green. And many of those names will report over the coming weeks. Well, that's what I think of Apple's earnings right now. But I want to hear from you. What do you think about Apple's earnings report and that Tim Cook believes supply chain constraints will ease around March? And remember, your comments make these videos so much better. Thank you so very much for watching, and I will see you in the next video.